One thing I love is the fact that the tenants are really sticky. I mean, think about it. If I'm renting a $2,000 a month apartment and you raise my rent by 10%, I might not sign up. But if I'm renting a storage unit for $100 a month and you raise my rent by 10%, I'm probably not going to spend a weekend, get a U-Haul, get my friends together to move my junk, excuse me,
You're right.
my treasures down the street just to save $10 a month, especially when I'm on a month-to-month lease. And I figure, I'll be out of there pretty soon anyway when I can get a long weekend. But yeah, these tenants are pretty sticky. They're not sensitive to price changes. That's one thing I really like.
You're listening to the Rich State of Mind Show, the podcast made to make you the total package in the entrepreneurial world and give you what we call a rich state of mind. If you are here looking to learn about real estate investing, marketing, elevating your business, and developing your mindset to get to the next level, then you are at the right place. Stay tuned and be sure to join our community on richstateofmind.com. Now here's your host, Anthony Ritchie.
Hey everybody, welcome to another episode of Rich State of Mind, where I'm talking to Paul Moore. I've been actually wanting to talk to this guy for the longest, and so I'm so honored that I got the opportunity to do so. So a little bit about Paul. After a stint at the Ford Motor Company, Paul co-founded a staffing firm where he was two-time finalist for Michigan Entrepreneur of the Year. And after selling to a publicly traded firm, Paul began investing in real estate. He launched multiple investment and development companies, appearing on HGTV, and completed over 100 commercial and residential investments and exits. He's contributed to the Fox Business and the Real Estate Guys Radio, and is a regular contributor to BiggerPockets, producing live shows, recorded videos, and blog content. Paul also co-hosts a wealth building podcast called How to Lose Money, and he's been featured on over 200 podcasts. Paul is also the author of Storing Up Profits, Capitalize on America's Obsession with Stuff by Investing in Self-Storage, which check that out. That's a really good book. And The Perfect Investment, CreateEnduring Wealth from the Historic Shift to Multifamily Housing. And as you can imagine, as you have noticed so far, Paul has a long resume. Paul is the founder and managing partner of Wellings Capital, which is a real estate private equity firm. Paul, he is a wealth of information, and I strongly urge that you guys listen to this episode in its entirety. Check it out. As always, thank you for listening. Please enjoy. Hey, Paul, thanks for taking this time this evening on this, what is it, Tuesday? Today's Tuesday. We've been looking, like I said earlier, I've been following you for a while, looking at your content. I've always appreciated how wise you actually sounded on your content. Definitely coming from somebody that's been doing it for a while, and you always seem pretty fair in your decision making. When I noticed, it wasn't nothing erratic. It was something that was always methodical, thought out, and it seemed to obviously have worked out for you throughout the years. So, but if you could please just tell everybody a little bit about yourself and what you do so they can get familiar with you.
Yeah, Anthony, man, what a great opportunity. What an honor to be here. Thank you so much. And man, thank you for serving our country at times like this. We definitely think we appreciate the value of people like you. So thanks. I got an engineering degree, which was my first mistake back in the mid 80s. And then I got an MBA, went to Ford Motor Company. And I realized after 5 years there, like during the 5 years, I think I'm an entrepreneur. I found myself chasing stuff on the side. I later realized a lot of that was chasing shiny objects, which was not healthy. But at any rate, we finally, my buddy and I left Ford and we started our own company. We started an HR company, staffing firm. And we sold that 5 years later in 97 to a public firm. And so I found myself, in my mid 30s, very highly driven, entrepreneurial, but I didn't know what to do. So I started investing in real estate to protect and grow our own wealth. And, I thought, hey, I'm a full-time investor now, but I really wasn't. I was more of a full-time speculator and shiny object chaser. And honestly, I made a lot of money, but I lost a lot of money too. And that's why I started a podcast called How to Lose Money years later. We did that for 4 years. But anyway, so I flipped houses. I did rent to own. lease option sandwiches. That was obviously before Airbnb. I would have done that if I could have. We built some houses from the ground up, and I found out that you shouldn't build a house if you don't know how to install a doorknob on your own house. That's just something I learned. But we did a small subdivision, and I was always trying to figure out how to get involved in commercial real estate. And as I was learning the value of investing instead of speculating, we ended up in a multifamily project that we built from the ground up in North Dakota for the oil boom there. And then we did another one, and I jumped into multifamily. I wrote a book on multifamily, and then later I expanded into other asset types as multifamily became so overheated. So that's how I ended up in self-storage and other asset types like that.
What made you go to commercial? What was the attraction with commercial real estate investing to you?
I don't think I could have put words around it at the time, but I mean, I think I noticed that the wealthiest people in the world, the Forbes 400, et cetera, have, they generally invest in commercial real estate to protect and grow their own wealth. And I thought, this seems like a really something I should look into, but I didn't know where the on-ramp was. I mean, who would I trust? How would I get started? Would I need tens of millions of dollars? How could I get a loan? How could I get the attention of a broker? I found out later that was really hard when I tried. And all those on-ramp, all those barriers, made it really hard to find an on-ramp is what I should have said. And later found out, about syndication, and that changed everything.
And, I'm assuming this is like pre-YouTube.
Yeah, some of it was. I think it kind of bridged the gap between, before and then after YouTube started.
Because I know like a lot of things that I always say, like in today's time, it's really hard. You almost probably have to do it almost intentionally, not, be exposed to some of the content that you'd have to go to the library to, 15, 20 years ago to find out information about. Now I can Google, there's either a blog about it or somebody's made a YouTube about it, a video about it. And it doesn't necessarily the nuts and bolts, like very in detail, but at least gives me the concept that it exists. And then I can go further and do some more research on that.
Yeah,
so
right.
People that, that tell me, hey, I was doing this in the 80s, the 90s, early 2000s. I really marvel at it because I'm like, you had to really go out there and find it. I feel like, and then, or people that just happen to know the information as well.
Yeah, that's a good point. I had not thought of that, Anthony, just that way. But 30 years ago this week, I was still at Ford Motor Company, and I was spending hours in the evenings at the library trying to dig out information. You're right.
Yes, and that's how. And those were the people that really wanted it. you know. All right, so you said you mentioned self-storage, and so let's talk about that. You could have picked, like you talked about multifamily. You said that got overheated. There are mobile home parks, but you're on self-storage, at least for your book right now. What was it about self-storage that you liked in particular about that asset class?
One thing I love is the fact that the tenants are really sticky. I mean, think about it. If I'm renting a $2,000 a month apartment and you raise my rent by 10%, I might not sign up for $200 more a month. $2,400 in the next year, I might move. But if I'm renting a storage unit for $100 a month and you raise my rent by 10%, I'm probably not going to spend a weekend, get a U-Haul, get my friends together to move my junk, excuse me, my treasures down the street just to save $10 a month, especially when I'm on a month-to-month lease. And I figure, I'll be out of there pretty soon anyway, when I can get a long weekend. Well, that long weekend usually doesn't come. But these tenants are pretty sticky. They're not sensitive to price changes. That's one thing I really like, Another thing is the fragmented nature of the ownership base. So there's about 53,000 self-storage facilities in the US, about the same as, all the Subways, Starbucks, and McDonald's combined. But about 3/4 of them are run by independent operators, and 2 out of every 3 of those only own one asset. And so they're typically mom and pops. That doesn't mean they're poorly run, but usually these mom and pops don't have the desire and the resources and the knowledge to increase the value of their asset, increase income, and maximize the value for their investors. Hey, they don't have to. They've already had about 120% gain just because the market has risen so furiously in commercial in general and specifically in self-storage. So there's that. One thing I like right now, Anthony, is that recession, it's a great recession catcher. I mean, if you think about it, if I have a very long lease on an Amazon warehouse or a CVS drugstore, 10 or 20-year lease or a warehouse, it's going to be hard to catch that inflation. But with self-storage, you can raise the rates every month if you choose, and you can catch the current inflation. And some of our operators do that. One cool thing is people think it's really easy to manage self-storage. And as long as they think that, that's great, because it's easy to manage a mom and pop self-storage, but it's actually hard to manage a great self-storage project. And so that's one of the benefits of buying from a mom and pop. They've taken the easy path, and they looked at it as little metal boxes that spit out cash. And we look at it as a business that takes a lot of work, just like any other business. And so sometimes acquiring these assets and adding a website and marketing and rules and basically even dynamic pricing like an airline does, where we're down to 2 more 10 by 10 units, we're going to raise the price. We even have an operator we invest with who raises the price, changes the price different days of the week. And they change the price based on all kinds of other factors. And they can do that because they're so good at predicting who it is that's walking through that door. Do they have a California license plate, or are they a local business, or whatever? So another thing I like is low cost value adds. This is going to transition into a conversation we can have about math if you want to, but let's start with this.
Okay.
If you buy a self-storage facility, I'm just going to use an example, for $2 million, and let's say that is $800,000 in cash and $1.2 million in debt. So that's a 66% loan to value ratio. You got $800,000 in cash out, and you add U-Haul. Let's say it's a area that needs a U-Haul, a U-Haul truck rental. So you add U-Haul, and you get commission from the U-Haul company for storing and staging these trucks outside your building. There's no capital expense. There's no big thing to add. There's not a lot of money you have to put out. You have to buy a computer just to manage the U-Haul. That's about it typically. Well, let's say you can add $1,000 to $5,000 a month in commission from U-Haul for doing that for an employee who's already working there anyway. So let's just say $3,000 a month is what you add. Let's do the math on this. Now, the value of a commercial facility, commercial real estate, the value equals the net operating income, the NOI, the net operating income divided by the rate of return, also known as the cap rate or the capitalization rate. And that's the rate of return that an investor could expect on an asset like this, in a location like this, in a condition like this, at a time like now. And so that cap rate is typically, used to be around 10%. Rate of return is what they'd expect. But now those rates of return, those cap rates are down closer to 5%. And again, this is the market's evaluation of the value of the facility per dollar of net income. I know I said a mouthful. So let's back up. The value equals the net operating income divided by the cap rate. Now back to our example. U-Haul produces $3,000 a month. That's $36,000 a year in net income, assuming there's no additional cost, with that. There shouldn't be too many. $36,000 a year is the net operating income you added. Divide that now by a 6% cap rate, which is a conservative estimation of the cap rate. It could be better than that, but 6%, that's 0.06. Now 36,000 divided by 0.06, you just added 600,000 to the value of your asset. Now remember, we paid $2 million for it. That was 1.2 in debt, 800,000 in equity, 800,000 in equity. The banks don't share in that value increase. Your value just went up from 800,000 by, you added 600,000 in value. Now your facility is worth, 2.6 million, that 800, excuse me, yeah, 2.6 million, that extra 600,000 went straight to the equity owners. So you just got a 75% return on the value of your equity. 75%, 600,000 divided by 800,000. And that is just from adding U-Haul. That's a low cost value add. Other value adds might include increasing the rent, increasing the occupancy, adding a showroom with locks, selling locks, boxes, tape, and scissors. Maybe paving or graveling some of those 2 or 3 acres out back that you're not using, that the mom and pop owner had no value for except to cut the grass. Well, now you gravel it and you turn it into a boat and RV storage. And you know how popular that is where you are. And so this is, there's all kinds of value adds that can be added and significantly increase the value of the facility, and even more so increase the value of the equity. This is some of the stuff I love about self-storage.
I love the fact that you brought up so many different ways to maximize the deal. I'm really big on that. I don't like being kind of put into a box. I like looking at deals and figuring out how I can maximize the most value out of them. So talking about something like this is really like perking my ears, because especially with the U-Haul idea, because now you had me thinking now. Almost every storage facility I go to, yeah, I see that U-Haul option, the tape, the boxes. They're all making money off those concessions and that U-Haul, and people will use it. It's out of convenience, right? Oh man, U-Haul's already here. My stuff is already here. So you're providing almost a one-stop shop, pretty much, for the people that will need your services. And you have me chuckling about the gas, and not the gas, but the days. They fluctuate like gas prices. What I was about to say, as far as your day to day, you're able to kind of raise and decrease your prices. And I didn't know that it was on a month to month. It's a month to month lease when it comes to those contracts, or you renting out the space.
Very powerful.
And then with self storage, you mentioned about putting that 800,000 down, having that 1.2 left over, and then increasing the value to 2.6. Earlier, you talked about that ramp, those barriers. One of the biggest barriers is amassing, the amount of money, the capital needed to get there. How is that possible, and what type of people are you looking for to invest with?
Yeah, so there. Would you be okay to answer that question if I actually went through 7 different paths to get involved in self-storage in any commercial real estate type of asset class? The reason I want to answer it that way is I think that will help me answer the question a lot more effectively.
Okay, yeah.
So, like I said, I didn't know where the on-ramps were. I didn't know, the barriers were huge. I mean, people need massive net worth just to get a loan, just to get the attention of a broker.
Yeah.
So how do you get in to an asset class that has these huge barriers keeping me out? Well, let's talk about 7 ways to do that. And then I'll try to answer your question with each one. So the first way is stair stepping. Stair stepping would be starting small. Buy a small self-storage facility. You might be able to buy one with 50 units. I know it sounds kind of funny, but you buy 50 units, maybe it has some, land with it, and you gravel it, or maybe you add some units, and you basically maximize the value of that property. You lease it up, you put a nice website, nice sign, make it beautiful, and then you maximize the value. Then you sell it and you buy a bigger one. You stair step up, fix it up, rent it up, sell it, buy a bigger one. Of course, the BRRRR method in the BiggerPockets world would have you refinancing, and you could do that too. Now, with this stacking method, you might be able to borrow money from friends and family, to answer your question, or you might be able to come up with, maybe $50,000 out of pocket and get a loan from, Live Oak Bank in Wilmington, North Carolina, just south of you. That provides loans for self-storage. You can get an SBA loan, maybe borrow $200,000, put up 50 of your own, maybe even get some credit card. I'm not saying you should do that, but if you had a good enough deal and you needed to do that, that's an easy way to get started. I know somebody in Texas who stacked their way up to like $17 million in value in one property. And so they basically stair step their way there. Second path to get into self-storage or other commercial real estate, Anthony, would be capital raiser. Now, it's really dangerous to raise capital because the Securities and Exchange Commission frowns on it. So they don't want you raising money unless you're a licensed broker dealer or unless you're a general partner in the deal. So if you can talk your way into a general partnership role, like let's say you find some people who know how to do self-storage, but they don't know how to find money. Well, maybe you can be the money raiser for them and get an ownership interest. And there's, no real cost to doing that one. The third one is being a deal finder. If you know how to use social media, write a lot of letters, bang on doors, do a lot of phone calls. If you have relationships with self-storage owners, you can actually potentially be a deal finder. And if you're a deal finder, you can try to get a deal, take it to another owner, like an owner operator, basically sell them the deal, and you stay involved. In other words, you say, hey, look, I want a 10% ownership to stay in this deal since I found the deal. You negotiate that up front. Well, you don't have to put any money up for that one either. Another one is go big. And this is the fourth path to self-storage or commercial real estate success. Hey, if you made a lot of money in Bitcoin before it dropped, or if you, inherited a lot of money, or if you retired from, the NBA or the NFL or America, a baseball league, I can't even think of the name of it. Isn't that terrible?
MLB.
That's how little I've watched baseball lately, the major leagues, MLB. And so if you retired and you've got millions of dollars, well, you can start big. You can go out and convince somebody to give you a loan, but you need to get a really good team around you. That one doesn't apply to many people. The next path doesn't cost any money, but it costs time. It's get a job. You may say, well, wait, I'm listening to this podcast to get out of my job. I don't want a job. Well, yeah, but think about it. If you can get a job as a property manager of a self-storage facility, you can learn the business inside out. Or if you get a job as an asset manager at a self-storage company, or you can get a job as, maybe a loan broker for self-storage, or maybe you can get a job as a commercial real estate broker. There's all kinds of jobs you could get to learn the business, get to know the people, get to know the lingo, learn it inside out, and then you can go out and start your own. And I know somebody who did just that. And one of the largest multifamily guys in America started out that way with a college job and an apartment. And he worked his way up from that same apartment into, CEO of Pinnacle Properties now. Rick Graff is his name. And it's pretty amazing the path he took. The sixth path is passively invest. Now, this one's going to take a lot of cash. If you've got a great job, if you've got a great family, if you're trying to live your life and you think you want to do this on the side, it's going to be really, really tough to do commercial real estate in your spare time. I never, ever, ever recommend that. Besides, you want to be like Michael Phelps. You want to be absolutely dialed in, totally dialed in, and obsessed with this, property management and this management of the, this commercial real estate. So if you don't want to do that, you could use your time to find a great syndicator and invest passively. To do that, you're going to probably have to be an accredited investor, which means you're probably going to have an income of $200,000 or $300,000 a year, or you're going to have $1 million in net worth or more to be accredited. Then you can passively invest, let's say $50,000 to $100,000 minimum in other people's deals. So that's the sixth path. The seventh path, probably going to cost you $25,000 to $50,000. And this one's find a mentor or a paid coach. A lot of times when you get a paid coach, you might spend $25,000 to $50,000 up front. But then eventually, if you're a great student, you can partner with somebody in your mentoring group, or maybe even partner with your coach. And I know a lot of companies a lot of people who got started by partnering with their coach. They brought a deal, the coach brought the knowledge, somebody brought the money, and they were off to the races. So that's 7 paths to get involved in self-storage and other commercial real estate assets, Anthony.
You mentioned about not recommending anybody getting involved in commercial real estate if they're going to be doing it part-time. For those that are, find themselves scaling to, let's say I have 10 single family homes. And my idea is to sell 5 of them to go into maybe a 15, 20 unit. Do you think that's still possible? At what point, because, you know, commercial real estate could be like a 5-unit apartment building.
Yeah.
At what point, maybe that 50 unit self-storage we're talking about, what are some, from your experience, you've noticed is that threshold of, okay, this is too much to handle?
It's different for everybody. I was talking to an orthodontist, actually an oral surgeon, who was making $300,000-400,000 a year, and he said, "Hey, I'm buying single family houses to scale up, and when I get to 20, I'm going to retire. It's going to replace my income." I said, "Really? That's great. How's it going?" He said, "Well, not very good. I'm on the phone with painters between oral surgeries. I'm on the phone with renters, tenants in the evening. And I'm getting pretty tired of it. And I'm only on my 3rd house." And I said, "Man, how are you going to do 20 if you can't stand to do 3? And he said, "You know, I don't think I can." I talked to another guy, he's a medical professional. He's got 42 units. They're like duplexes, small apartments on the side. He's able to do it. So I don't really know. I mean, I think that, you know, if you have great property managers, you can do this passively, but I think having a great property manager would be the key. I know it's a lot of money, but I wouldn't do it without that.
Yeah, that and probably a virtual assistant, you know, some type of
Yes.
executive assistant to answer your emails, make those phone calls
Yep.
for you throughout the day. And maybe you're just meeting up with them, maybe too. When I say meeting up with them, a lot of things that we learned from the pandemic can be done, you know, remotely. So probably
Right.
Zoom calls, maybe 2 or 3 times a week. It's possible. It is doable to scale to a certain level and still handle. You know, for me, I was on deployment when I had my long-term rentals, and it was hard. Thanks to my wife, she was able to handle a lot of stuff too, but it's hard I'm 8 hours ahead in the Middle East, trying to make phone calls at 3 a.m. so I could catch a contractor at 3 o'clock in the afternoon.
That's terrible.
Yeah. So I definitely feel people's pain with trying to multitask, especially if you're distant. You mentioned earlier about Wilmington, North Carolina, which I think is about a good 4-hour drive for me from here.
Right.
And they have a self-storage loaning bank down there.
Live Oak Bank. They're one of the biggest self-storage lenders, especially for SBA, Small Business. What is it? Small Business Association, MLB, whatever. No, seriously, the SBA, and they're out of Wilmington, North Carolina, I believe.
So what made me want to bring that up, because for one, I would like to definitely check that out myself. But you made me think about something. Do you recommend somebody that is trying to buy, let's say, that 50 unit, do you recommend them doing it local, or let's say it is in North Carolina or Florida? Do you recommend somebody owning that long distance?
Yeah, I mean, if possible, I would try to do it local, your first one, because you don't know what you're going to run into. You don't know what you don't know. Now, I was on a podcast the other day from a guy who he teaches people to manage their facilities remotely. And you might want to have him on the show someday. He teaches people to, set them all up to be automated, working from your iPhone or Android, and meaning the customer can lease it. They can open the gate code. They can open their unit all on, electronically. I think the unit itself has a lock though, manually, but at any rate, it can be run manually with cameras. I know a guy who has 12 self-storage facilities. He has one lady sitting in an office, and she's surrounded by screens, and there's cameras on each one of the facilities rotating, watching the facility. And she sits there, and when someone comes up to the gate, she says, "May I help you?" And she talks to him right from her, little place in Alabama. And those are all remote. So if you're really good and you really want to do automation, I would still try to do your first one locally though.
So that stuff does exist, because I had inherited some land from my grandfather down in Hertford, North Carolina. Yeah. And I don't feel like going down there every time something is going on. So I intend to turn it into until told otherwise for a better idea, I intend to turn it into an RV/boat parking lot. Mm-hmm. It's an acre of land. So I was trying to think of an idea to automate that. And that idea with the codes, maybe having a lock where they clamp it on their boat or their RV, and that's when the timer starts. for them to, to start getting charged. So that concept does exist. I just need to, okay, cool. Because I was like, how can I automate this and not have to drive an hour and 15 minutes every time I want to check somebody in?
Yeah. I mean, ask me after the show and I'll connect you with this guy. Now, I don't know if it can do everything you want, but I can sure try to help you.
No, thank you. Because there's always somebody that is probably doing what you thought of. My father would say that you're probably not the first person to come up with that idea.
Right.
Somebody's probably already doing it. So yeah, so we've talked about the concept, but let's talk about your book. So it's been out since November, and I saw that the audio version is free.
Really? Where do you get that free?
On Amazon.
How's it free?
It says audiobook, $0.
Okay. Here's what I think. Okay. I have a theory for why it says $0. I'll tell you after the show. I don't think it's free for everybody.
Oh, okay. Gotcha. Well, Kindle $9.99, and then the hard paperback, I think, says $16.99.
Okay.
That sounds about right.
That sounds about right, my friend.
All right, cool. So storing up profits, like I said earlier, BiggerPockets Publishing, which I think is awesome. What are you looking for the reader to get out of that book when they finish reading it? Are they ready to go start charging and buying their first storage facility? Are they able to at least have the basics down? What is the mission of this book?
Yeah, great question. So the first third of the book is the big picture, why we love self-storage. And that's what I started out with earlier. The last third of the book is the 7 paths I just went over, the 7 paths to getting in commercial real estate or self-storage specifically. The middle third of the book, which we haven't talked about, is 4 different ways to build a self-storage empire. And I can touch on that if you want.
Yeah.
So basically, it's for anybody who wants to invest in or start working in the field of self-storage.
So yeah, let's cover that the 4 different ways.
4 different ways. Okay. So one would be the one I wouldn't recommend anybody do unless you're a huge, big company. And that would be just buying a cash flowing self-storage. It might be cash flowing 5% a year. There's no real upside. There's no real drama. You just buy it and collect your checks.
Yeah.
I don't think a lot of people are excited about that. Path number 2 is build from the ground up. This is the highest risk method by far. The biggest risks in self-storage are all in the building and leasing up phases. But it's also got the highest potential profits because you're taking all that risk. So building from the ground up is option 2. Option 3 is a value add self-storage. And value add means you're buying perhaps a mom and pop facility, and you're making all kinds of changes to increase the profits and maximize the value. And like I said before, there's all kinds of value adds like raising the rents, or adding a paid billboard, or a propane filling station, or U-Haul, or point of sale items, charging insurance fees, late fees, reducing expenses, adding boat and RV storage, all that stuff we talked about. That's the value add strategy. And then the last strategy is kind of fun, and that is renovating an existing building and turning it into self-storage. So my friend AJ Osborne bought a super Kmart in Reno, Nevada. He sold off most of the parking lot to apartment developers, and then he cut the building in half. He spent a total of after he sold off the apartments, he had a net $7.5 million in this big super Kmart. And he'd already converted it to self-storage. He only had $2.5 million in cash in it and $5 million in debt. Last time I talked to him, remember, he only had $2.5 million cash, $7.5 million total. He turned down an offer for $32 million on this property. So extremely profitable if you can do it right. We've invested in 2 in Boston recently where they took old, warehouses. One was an old warehouse, one was an old retail strip center, and they're converting them to self-storage. Extremely profitable and probably not as risky as building from the ground up, but certainly riskier than the other 2 paths.
I always wonder what people would do with like those abandoned fresh Kmart's or what is it called?
Toys R Us.
Fresh, yeah, Toys R Us, Farm Fresh.
Farm Fresh.
Yeah, those big, grocery stores. Like, what do you do with that? A movie theater, a big
Well, they're
gym,
already in a great
gym?
location. They're usually on a main road already. So it can be a really profitable thing to do, my friend.
And then I never even heard about that, selling off half of the parking lot, to
Yeah.
whoever would be interested in it, because that's a lot of space that's unnecessary.
Yeah, storage doesn't take more than a handful of parking spaces usually.
Awesome. All right. So what I want to ask, because I try to make sure I ask everybody on every episode is, I like to call it your rich state of mind. What is your big why? You don't have a particular niche that you've stuck to your entire real estate investing career, but you have stayed within this world. Why is that? And why you continue to keep going?
Yeah. So I want to answer that in two parts. So the first part is I love commercial real estate because it gives a lot of people a chance to enjoy the benefits of real estate, the tax benefits, the growth, the income. It basically allows people to create true wealth without having to do all the heavy lifting. And when I say true wealth, I'm talking about owning assets that produce cash flow. It's not Mercedes. It's not the mansion. It's not the box seats for the Knicks. It's not all those things that make true wealth. True wealth is having assets that produce cash flow. And that's what commercial real estate does so very well. That's why I want to stay in it. And we can make this available through syndication. I'm a fund manager at Wellings Capital. Our funds provide cash flow and appreciation to lots and lots of people who don't have to do the heavy lifting. The other part of my big why is this. Did you know if you took the record profits of Apple, General Motors, Nike, and Starbucks, added those record profits together, doubled that number, you'd come up with the approximate annual profit from human trafficking every year, according to the US State Department. And so I'd like to believe that if I was alive in the 1800s, I would be fighting for abolition of slavery. Well, this is a form of slavery, and it is huge right now around the world. And so my company, Wellings Capital, we're partnering with other organizations to try to fight to free these victims of human trafficking and to end this great evil.
Thank you. Thank you for actually highlighting on something like that. And a lot of times when we get on these podcasts, not that I consider anybody selfish or not consider it when they talk about profits and becoming wealthy, but it always is nice to hear about people making an impact with what they do. So thank you for that.
Yeah, absolutely. Thank you for giving me the opportunity to share it.
Well, it's been a pleasure, Paul. This is, like I said earlier, and I really don't want to make, I really want to make this clear. Like you've been one of the people that I've been following for a while. And I've always appreciated what you've had to say. Never like waste of words, kind of straight to the point. And like somebody's like that dad you listen to, like, oh yeah, I need to probably listen to this guy. This guy's sounds like he's got something good to say. So I really appreciate that. And I'm really glad that I got you on the show and that you'll be featured here soon. So thank you.
Man, Anthony, it's been such a blessing and an honor to be here. I really appreciate you and the show, man.
Thank you for sticking with us from the start of the episode. Please share our show with friends and family, visit our YouTube channel, and view more of our content on richstateofmind.com. See you next week on the Rich State of Mind Show.